live here with Bela Carrasco, right off her wedding and honeymoon here. So it's just talking about that. You had a blast, so congratulations and thanks for joining me. I appreciate it.
Thank you. Yeah, I still have that new bride glow, right?
I was gonna say, all right, I'm hopefully that will last forever. So
Yeah, that's the
um,
goal.
there you go. But awesome. So yeah, we connected like a few months ago, and I think you're doing some awesome stuff, just like in the investing space, real estate, and so I'm looking forward to just learning from you, honestly, about a lot of that stuff. But first, we can just talk a little bit maybe about your soccer career. So you played soccer at Marquette, fellow Big East athlete here, so that's awesome.
Yes.
But yeah, what was your experience like with soccer, and kind of how did that translate into what you started doing afterwards?
Yeah, I wouldn't trade my experience for the world, but when I talk to people about their college and what they did on a Tuesday, I was like, "What? You had time for that?" So it definitely molded me not only in to be a better leader, to be a better teammate. Obviously, the athletic part was really tough, but you also learn how to balance athletics with your schoolwork, your education, the not so fun stuff. So for me, that was a priority because I knew early on that women didn't get paid very well in sports. And so I always tried to prioritize my education and my experience as much as I could. And growing up, my dad invested in real estate himself. So I grew up going to his property tours, investment meetings, even ran the books for him at some point. So double majored in real estate and finance at school, and that really led to my career. I've been in that for over 10 years now.
Awesome. So sounds like you got a crash course on that from a young age, huh?
Yes, I got exposed to it, got the bug. You see the wealthiest families and they own some type of real estate. So decided to go to school for it and started out as an analyst and now I work for a private equity firm that invests in real estate. So it's just funny because even though I did get exposure to it at an early age, I didn't know investing in this way was even possible.
That's so cool. So yeah, so those first couple jobs, so you started out as an analyst, you said, because you've been at what three like three different places so far since you graduated.
That's right. Yes. My
Okay.
first 2 years, I was an analyst at a rating agency. So they get a bad reputation because of what happened back in the day, like AAA everything.
Yeah.
But we're very heavily scrutinized now. But it was really nice because I got exposure to property types of all kinds. I would fly to Puerto Rico to look at grocery store chains. I would fly to New York to see all those pretty Class A buildings. And my job was to underwrite the property, so look at the numbers of it and then actually visit that property, get a tour of the asset, usually with a property management team, which would then give me insight into other parts of that property because you can't only look at the financials, there are other factors that go into the performance as well. So then marrying both my interview with the property manager and my own analysis of the financials to then write a report on how I think that property would perform and then after my time there, I got recruited to then become an analyst for a family office out of Chicago. That was really empowering just because I worked for a woman who was very successful. And so it was really great to see a woman being that successful. And I specifically was working for her real estate arm. So they had a couple of developments going on amongst other properties and projects, but I was specifically in charge for their developments in Mexico because I can speak Spanish, and then also a project they had going on in Boston. So that was nice because then I got introduced to developments and construction draws, which a very different animal compared to just properties that are already built. And then from there, I've spent the past 6 years, like I just alluded to, at a private equity real estate firm. So we build, we buy, we lend, but it's all to multifamily.
Okay. Awesome. And at this point, are you like investing in real estate yourself? I mean, that's obviously the career that you've taken, but is that something that you do personally as well?
Yes, so because of my dad's experience, I had always set out to find something of my own. I wanted to just start small and dip my toe in myself. So I now own two single family homes that I rent out. And I'm sure we can dig into this later, but it is not fun dealing with what they call tenants, toilets, and trash. The amount of effort you take physically, mentally, financially, in my opinion, is not worth it in this day and age. Back in the day, I think it made a lot more sense because home prices were not at the levels that they are today. So the rent that you can get versus what your mortgage payment is today is just so slim. And I personally don't have the time to probably find the deals that it would require to actually make meaningful cash flow because I look at what I make today on my single family homes compared to what I could make when I am investing passively, when someone else is doing all that work and dealing with all that headache.
Mhm.
And the return is pretty similar. So for me, I want to focus my energy on traveling, on food, on spending time with my friends and family. That's what makes me happy. I don't want to have to be dealing with the HVAC going out again or the plumbing, or I had a tenant call me at 10 p.m. one time to tell me the city didn't take out her trash. So just like all those little things that you don't want to be dealing with, they can be outsourced, which is something I didn't know until I actually got into the industry.
Interesting. Okay. So what you were just saying, it sounds like some of those things might be misconceptions, like because you hear about real estate investing and how it's like a very passive thing, and I feel like the more I don't know, I'm not at that point yet where I'm doing that myself, but like the more you read about it, you're like, no, that's actually not passive at all. Like you have to do all those things that you just said.
Yeah.
Yeah, like what I mean, you just mentioned some of the misconceptions, but like, would you do that over again, or would you go a different route, maybe?
I think I would go a different route. Like I said, I think it's just a different time in the economy right now for what you can buy versus what you can get out in that of rent. For me, sure, an argument can be, well, why don't you just get a property manager? Well, I actually do have a property manager. So it's actually even more hands-on than you would think, even when you have a third party that handles the day-to-day. So I can't even imagine what my head would be doing if I had a job on top of trying to handle every little thing that comes out of a property just because there are tons of things that go wrong all the time. So, in my opinion, my experience has been that it is not a passive investment. If anything, I wish that I would have maybe gone bigger because the amount of energy you put into a single family home is probably the same as if you were to acquire, call it a 15 unit apartment complex at that point. So at least with that apartment complex, you could probably be cash flowing a little bit more in those things. But again, it depends on how much time you're able to put into it. I'm sure if you can acquire an asset at a really good basis, then maybe that story changes a little bit. But I think unless you're really dedicated to that or have enough money to pay someone to be dedicated to that, I personally would just advise people to maybe look elsewhere to get real estate exposure.
Okay. But not to mention the money aspect of it too, right? Like if you're buying a 15 unit
Hmm.
complex, you probably need to either be doing super well in your career or elsewhere. Like you need the assets obviously to be able to do
Yeah.
that. Like what do you say for younger people maybe that are just like would you suggest building up that wealth first? I mean, maybe that's the only way to go about it, but you have to build up the wealth first and then you can start thinking about investing.
I think so. I think first and foremost, my opinion is that you have to get an emergency fund. I think that is a absolute non-negotiable. I always tell them, I have three younger sisters. I always tell them get 3 to 6 months of savings because you never know what's going to happen. And if you invest in especially real estate, it's illiquid, so it's not like you can get your money out the next day. Even if you are in the stock market, who doesn't say it's going to crash 20% the next day? And then if you have an emergency surgery that you need, you can't get the money that is required for it, especially in a world where a tweet can change the market. It's insane how fast the world is moving today. For me, that's step one. That's a non-negotiable. But after that, I follow a simple 50-30-20 rule. 50% goes to needs, 30% wants, 20% savings because it's a delicate balance between actually enjoying your life, but also being mindful that there is a future that you have to prepare for. I don't think we all want to work until we're 80 years old. So it's finding what works for you, but there are opportunities out there that you can start investing at an early age that doesn't take too much capital. So stock market is an easy one. I even know kids who are in middle school that are even trading, which is a whole nother can of worms. But for me, I kept it simple. I always tell my sisters, even you can put money in an ETF or use a robo advisor. Like I know there's Acorns out there, for example. So you just answer a couple questions. What's your timeline? What's your risk tolerance? And then they'll actually just put a diversified bucket together for you. And you can, the whole premise behind Acorns is it'll just round up for your different purchases, which is interesting, but you can also put in regular payments that way. So just thinking about savings in that sort of way when you're first starting out, I think is a nice way to just start dabbling your toe, and then you can grow bigger from there.
Yeah, definitely. I used to use Acorns right out of school. Yeah, I don't
Yeah.
really use it as much anymore, but that's funny. So I wanted to, and then like obviously we'll dive more into what you're doing these days with Origin. I want to talk about that, but the podcast. So you have a podcast yourself.
Yeah.
What made you start that, and like what types of folks? I know it's some athletes, right? Like you made Mark Parsons is awesome, by the way. I went back and listened to. He's just got so much energy.
Yeah.
He's a great dude.
Yeah, he just like very from his core, you can tell he just wants to help, and that's his whole MO. And it's like you can really, when someone has a sales breath or ill intentions, you can tell. But for him, he's just so genuine, so kind, so brilliant, has amazing experiences to share. So
A
I'm glad
hundred
you were
percent.
able to talk to him.
Yeah, yeah. He's yep. Um, But so yeah, so I went back and listened to your episode with him, which was great. But just like the podcast, are you doing different seasons of that? Or yeah, I'd love for you just to share kind of what your thought is with that.
Yeah. Yeah, so I was looking to marry my skill sets, my education with more of a passion project. And so like we started off talking, I played soccer my whole life through college. My younger sister played soccer in college. My youngest sister is getting recruited right now. So being athletic is and active is a huge part of who I am. And I remember my teammates coming to me being envious that I was going to school for finance because they had no idea anything about money. And then you take that concept with also the fact that money is so taboo, like no one really wants to talk about money. But if you think about it, the more comfortable you are with money, then the more ability you have to reach your financial goals. So my whole premise behind it was if someone wants to achieve true wealth, stuffing their money under a mattress is not going to get you there. So how can I empower people to be more confident in investing and be confident in that investment decision? So I just made a whole curriculum based on my experience talking to investors for the past 6 years at that point. I brought on experts in each area of that curriculum to help people navigate the due diligence process when they're investing. And then from there, I brought on professional athletes because I wanted professional athletes to talk about business and money to encourage those that are younger, especially with the NIL scene coming online as of late. It's very uncharted territory, but you just always hear about that professional athlete who blows all of his money. And a lot of that is just you don't know what to do with all that money and you get excited. So you have to think about your future self today, and you need to utilize your name, image, and likeness when it's at its highest so that you can then retire comfortably and not be scrambling for money at the end of the day. So all of that to say, that's why I started the podcast. And then to answer your second question, season one was really focused on that. I think season two will probably focus more on the intangible parts of money. So for example, how to live a healthy life, how to be more mentally strong, what is legacy planning, just different things that I feel like are not talked about enough, and different financial tips that I've learned along the way on top of just the basics.
Yeah, that's awesome. Yeah, it's an interesting point too about the NIL because I've been talking to a bunch of different people that are just in that right now. And one of the things that keeps coming up is like some of these athletes, although it's a small percentage, is that some of them, if they're making a lot of money in college and then they're going to have to figure out, like, assuming they don't go pro, like the 1 or 2%, then they're going to have to figure out what they're going to do after they might have some of these big NIL deals and then going into some kind of entry level job. Like it's just going to be definitely an adjustment, but I feel like those athletes, yeah, to say the least, but I feel like some of those athletes are just getting educated more now on like the business side of things. I don't know. I
Hmm.
didn't really. It sounds like maybe you. It sounds like maybe you were thinking about that. I wasn't as much when I was in school. I was just focused on
Oh yeah.
baseball, but um, yeah, like just some of these opportunities that could come across their plate, like could prepare them for what's to come after school too.
Right,
So
exactly, right, because even though we think that we're unstoppable and immortal when we're in our 20s, the fact of the matter is you don't know when that injury's coming, which is something Mark Parsons dealt with. You don't know when you're
mhm,
going to get cut. You just don't know what's going to happen. So you have to take advantage of what you have now to help prepare you for the future.
definitely. So all right, Bella, that's awesome. What about so what you're doing now? Like what's kind of your day-to-day like with so it's Origin Investments. I know one of the big things you guys focus on is multifamily
Hmm.
in like the Sun Belt. Is that what you're saying? Like in Texas, North Carolina, down in that area?
Yep,
It just
yep.
maybe what does that look like with what you're doing there these days?
Exactly. We're just looking at areas where the population is growing. How is the affordability? How's the quality of life? Is it business friendly? Because then that's going to attract people to that market and people are going to need a place to live. And multifamily real estate, it's an essential asset class. Everyone needs a place to live. Also, one of the worst things humans have to go through, in my opinion, is moving. It's just absolutely terrible. So, the multifamily asset class has a lot of tailwinds behind it, especially right now. The spread between renting and a mortgage payment has never been wider. So, owning a home is pretty unattainable right now. We also have a housing shortage and some other things going on that we believe makes it a good time to be investing in multifamily specifically. I know returns aren't as sexy as a cool VC company, but it's also that investment can go to zero the next day. You just never know when it'll pan out. It's also 7, 10+ year holds. So it's there's a lot of money tied up there as well. But in terms of what I do day to day, it's just answering investor questions. So if someone wants to invest or is curious, they'll book a call with me, they'll email me, I'll meet them for coffee or lunch or what have you. And we'll just talk about any questions they have. I'll bore them with shop talk and we'll go from there to decide if it's a right fit for them because sometimes it's not. Sometimes they need um, maybe just income and maybe if it's a development fund that we have it takes 3 years to build a property and then some more time to lease it up, so if you need income today that's not going to be a good strategy for you. At Origin we try to fit within everyone's needs, so we do have income funds, we do have lower risk offerings, we have higher risk offerings, so depending on where somewhere someone is we try to have something that aligns with that, but you have to have your plan and what you want first.
Got it. Okay. So then where do you fit in with like a financial advisor maybe? Because we talked about that a
Mm,
little bit. How I've had a few folks on. You see like most are good, right? But you also see some that are not so great. And one of the things I heard you talking
yeah,
about was that some financial advisors, depending on where they like what firm they're with,
right.
are ill incentivized and
Yeah.
they get paid to open up like a certain number of checking accounts, certain number of mortgage, like things like that. That's why I think RIAs are. I just think that might be the future of a lot of these things. But like, well, maybe where do you fit in that holistic picture with a financial advisor, somebody laying out their plan for the future?
Yeah, well, I am certainly not a financial advisor, so I don't have any of the credibility or credentials behind that. But all of my experience just comes from what I have self-taught myself because I have interviewed several financial advisors, but none of them have ever really advocated for alternative investments like real estate. And so that kind of makes my alarm bells go off because, as you were saying, I always ask how someone is incentivized. And so a lot of it is through the products that they sell. Usually, alternative investments don't fit under their umbrella, which they can earn commissions on. So they don't necessarily push that. Of course, this is not everyone. I'm making a huge generalization, but that's a question that I would ask if I was interviewing a financial advisor. Also, are they a fiduciary? So there's different ways that financial advisors approach it. I do think there is a new era where financial advisors are realizing that alternatives do have an important role in portfolios because if you look at the ultra high net worth portfolios, it's not only stocks and bonds. So there's got to be something there about it. And so no one's going to care about your money as much as you do. And that's why I am such an advocate for education because you can't, in my opinion, you shouldn't be trusting the advice of one person. How can you bring community? I'm sure someone knows someone in the financial world that they can maybe pick their brain on. So ultimately, just again, empowering people to get more educated so that they can make the decisions that impact them at the end of the day the most.
Hmm. It's the truth. Nobody's going to care about your money more than you will. Yeah, that's it's a good point. So, how about just like in terms of I jotted down here like sourcing deals, raising money, identifying good ones versus bad ones. Like,
Hmm.
how do you? I don't really understand. Yeah, I don't understand how all that
Yeah.
process works. Can you give like a very or a
Yeah.
short version of that?
There's a lot here, which is exactly why I dedicated a whole season of my podcast to this because every episode literally walks through every step that I think is important. So, like I was saying earlier, you can certainly do things yourself and invest in real estate yourself, or you can go with someone who dedicates their work to this. That way, you can spend your time the way that you want to. I already made that point earlier. My number one tip would be to look at the team because cycles are inevitable. Fortunately, we want the world to be a straight line, but that's not how life works. So you want to be confident in the team that they're being proactive and that they can make it on the other side and that they're being mindful of their debt because you saw that really kicked some people in the butt back in 2007 and 2008 because if you can't cover your debt, the bank's going to take it back and your investment goes to zero. Something else I like to look at when I'm looking at a team is are they co-investing? Are they putting their money where their mouth is? And what's their track record? Of course, you hear the same old thing every time. Past results aren't indicative of future ones, but it sure does prove their ability to make it through different cycles. And in that track record, also look at if they have faced hard times. Did they win in the past just because the market improved, or was it because they were actually good operators? Aside from sponsors, another important element when you're looking at a deal is the underwriting. Yeah, it's great if someone says, "Oh, I can give you a 20% return," but if the assumptions that they're using to get there aren't valid or even reasonable, then that should ring your alarm bells as well. So, I talked about basis. Basis is what you pay to actually buy the property. So, I think looking at that is important. What are you buying it for versus what are the recent sales looking at? You want that to be lower than the recent sales. Looking at their rent growth projection, if rent has increased 6% in the past and they're saying it's going to increase at 8% in the future, do you really think that's sustainable? That doesn't really make sense. Expense wise, are they making up numbers? Are they using based on their past projects? Just there's a lot to go into there in itself. And then, like I alluded to just a second ago, the amount of debt that they're using is a huge one. So, what interest rate is being assumed? Do we think that that interest rate is moving up or down? So, apart from the sponsor and the underwriting, there's more nuanced things like a PPM. PPM is private placement memorandum. It just asserts the legal side of the investment. So What legal rights do the investors have? Are the documents of quality, or do they seem poorly put together? Are there conflicting terms between what the subscription agreement is saying, what the operating agreement is saying? Do you have repurchase rights? Can they take your ownership? So that's just a little bit there just to give you a flavor. And then the last thing I'll end with, because there's a lot more, but I've already probably bored your audience, is strategy. So know your why. I think that is one of the most important things that you can do for yourself is make a financial plan. Because if you think about it, if you're trying to go from LA to New York, sure, you can find your way there, but if you put it into Google Maps, you're going to get there way faster. So if you think about it in terms of a financial plan, it's the same concept. You can do random investments here or there, but unless you know what you need, it's probably going to set you back in some way. So when you're looking at something, you have to know your why. Do you believe in their markets? Are their returns in line with what you need? Am I older, so I need something a little bit more short dated and less risky, or am I younger and I can take on a little bit more risk and have investments that don't pay me out the next month? So that is just a few a few things that I would look at when evaluating an investment.
All right. Well, hopefully one day when I get to the point where I'm investing in this, I'm going to reach out to you because you're
Yeah,
you're an expert
happy
with
to
this.
help.
Yeah. So, all right, Belle, awesome. I just want to ask you a few more things, and we'll kind of start to wrap up. But are there specific cities like I know that we're talking about the Sun
Hmm.
Belt, but I guess Raleigh. I might have heard you talk about Raleigh
Yeah.
before. Yeah, like are there specific cities that might be you think undervalued, or I don't know if you can share all your secrets here, but I'm just
Yeah.
curious, like if there's any places that people aren't looking at that maybe they should.
I don't know about undervalued. I know that some people out there try to like what is that? Not estimate, but forecast what the next big city is going to blow up and be. I think for me, it's just like what is tried and true. I know that the Nashvilles and Austins of the world right now seem like they're very oversupplied and expensive, but in my opinion, those cities have so much to offer, and that's why people keep moving there. So I think it doesn't have to be complicated. It's just common sense. I just ask where are desirable cities, and yeah, it's going. Of course, those cities are going to draw more expensive real estate, but you would have to hope that that city would continue to build on itself because that's how cities get bigger and better. So
Makes sense.
that's
Yep.
my thought.
Yep. Okay. All right. Awesome. Oh, all right. So I'm just thinking like if there's because my audience hopefully ideally is former athletes kind of figuring out what's
Mm-hmm.
next. So I'm just thinking if there's like a younger athlete that was listening to this and they're like, all right, all this sounds great, but kind of how do I get there? Like what do I start to do? Obviously, you talked about it a little bit. You have to start saving. You have to have a financial plan.
Mm-hmm.
But how? I guess like how attainable I mean, maybe that's probably not the right way to ask it, but like somebody that's just starting out, maybe their time horizon, and because I know you deal with a lot of accredited investors as well, right? So,
Right.
like, what's the reality for somebody to get to the point where they can maybe have a conversation with somebody like you about these opportunities?
Yes, and I ask the same thing to my athletes on my podcast, and one common theme that I've heard repeatedly throughout was don't be scared to reach out and ask questions because that's how you learn. If you think about the world today, you can Google something, you can use AI, you can use YouTube. Any answer you want is super attainable. You can even still go to a library. Like, there's just no excuse, in my opinion, for you not to do something. I know it's scary or you don't want to be perceived a certain way, but you're not going to learn unless you find a mentor or ask the questions. So I think that to me is an important step.
Truth. Yeah, you got to get a little bit uncomfortable, right?
Hmm.
Because yeah, and just kind of
Yeah,
try out different things as well. So,
there's no
um,
growth in comfortability.
there you go. That's the truth. What about so selfishly, like how do you balance your time? Because you have the podcast,
Yeah.
I'm sure very busy with Origin Investments. You were just on your honeymoon. Like, do you do anything? How do you think about that? Like anything
Yeah.
specifically, or I don't know.
Yeah, it's funny because my husband will also ask those same questions. I don't know if it's just because I've been a student athlete my whole life, but I have just been very good at efficiency. So again, planning is what really helps me. So I have time blocks on specific days I dedicate to specific things. I have made a calendar for myself. I just think planning gets you a lot of places very far. So I would say time blocking, trying to prioritize your day. You don't have to do everything every single day. And so being able to split those up between the days is what helps a lot. But again, I think that it's just all about the planning aspect of that.
There you go. Well said. Yeah, because you got to plan and you got to, yeah. Because
Hmm.
some days I'll get to the end of the day and I'm like, I look at my list. I'm like, I don't even know what I just accomplished today, but you
Totally.
really gotta.
Yeah.
That's what my dad jokes about. He's like, I'm pretty sure I just spent the day like shuffling papers from one.
Yeah.
He
Yeah.
jokes about, it, but yeah, moving papers from one side of the desk to the other. So all right, Belle, awesome. What I'm just curious too, like for the podcast, is there anybody you really want to get on there, or any guests that you're like, oh, this person would be awesome to host?
Hmm. Yeah, that's a good question. I mean, honestly, obviously, like the super successful, like a Shaquille O'Neal, for example, because I think he is someone who is so exemplary of being a phenomenal athlete, but also setting himself up for success after he was done with athletics. So I think he owns a lot of different franchises and things like that now, but just that foresight and having his ability, or rather his ability to plan for his future. I assume he did that while he was playing, is the epitome of what I wish everyone would do.
Nice. Wow. Love that answer. I hope, yeah, speak that into existence. Get Shaq on the podcast at some point.
That would
That
be
is
awesome.
awesome. That is great. So, well, cool, Bella. All right. So what's next for you? I mean, yeah, what do you think is to come in the future just with Origin Investments? Like anything specifically you want to accomplish in the next whatever time period? Yeah.
Yeah, I would love just to continue to help educating people and
Mhm.
encouraging them to invest. It's a very scary thing to trust someone with your money because you worked really hard for it. And so just being able to continue educating people and making sure that they feel financially literate enough, and just not making money such a taboo topic anymore, because you're just going to continue to get better if you learn more about it.
Yep. Love it. All right. Well, you're doing awesome things. So yeah, best of luck. I'll keep following the podcast and on LinkedIn and everything too. That's actually how, to your point, I'm pretty sure that's how we connected. Because I think maybe
Yeah.
at some point you sent me a message. I forget if it was me or you, but just like, hey, do you just want to hop on a call real quick? And that was a few months ago. You made an introduction to somebody. I still have
Yeah.
to intro to you, maybe a few people at a company I used to work for. But yeah, like this otherwise would not have happened. So
Right,
there
that's
you go.
true. Yeah, it's
Yeah,
true. The
good deal.
power
So
of social media these days.
yeah, yeah. So where can people find you? I know you're on LinkedIn, but anywhere else if they're interested in learning more?
I think LinkedIn's a great place to go. I know my name's a little bit different, Isabela, but I'm pretty good at answering direct messages. I post regularly on there, so if you need any tips, that's a nice place to go. You also have a link to my podcast that you can get to from there. My podcast is on Apple, Spotify, all the big ones, and YouTube as well. So I know that there's a lot of different ways to consume information out there, but hopefully one of those will be helpful.
There you go. Yep, just keep consistently doing it, which you
Hmm.
are. So awesome. All right, Bella. Well, thank you. This was awesome. I appreciate you coming on.
Well, thank you for the opportunity. It was great.
Definitely.